Welcome to Recalibrate. I am Himanshu Jain. For many of us, doing fine just isn't enough. On this show, we talk to those who shifted from stable jobs to building real estate, businesses, and true legacies. If you are ready to pivot and own your future, let's recalibrate. To our listeners, if you want to know more about Sumit's work in home care and franchising, you can connect with him on LinkedIn or visit his company website. We have put all these links in the show notes for you. Just scroll down and reach out to him directly. Today on Recalibrate, we are joined by Sumit Madan, a Massachusetts based entrepreneur, builder, and investor. Sumit's journey is a literal definition of recalibration, moving from a student with just $25 in his bank account to building a portfolio that spans home care, franchise consulting, construction, and real estate. He's the owner of Comfort Care, Senior Care Services, and leads Vishnu Franchise Brokers. Sumit is here to share how he broke through the W2 ceiling to build generational wealth and a life driven by purpose. Sumit, welcome to the show.
Thank you, Himanshu. Thank you for inviting me to this show. I will be happy to share my experience, which may be able to help even one person. That'll be great.
Your journey is an inspiring journey. I'm sure it's going to be a lot of good nuggets here where people can learn from it and then they can apply to their life. So I'm looking forward to this conversation. So you mentioned to me while we were talking that at some point when you came to US, you had $25 left in your bank account. And then to talk to us in terms of from there onwards, how did you continue knowing? In my mind, if somebody gets to that point, they'll probably pack their bags and go back. But you continued, right? So what made you continue? What was the mindset that kind of helped you go through that phase? So talk about the journey, please.
Sure. So yeah, we came actually almost 30 years ago. Me and my
Mm-hmm.
wife, we got married, and within 20 days, we landed in US for the first time as a
Mm-hmm.
student. And we came from a very modest family back in India. My dad had retired long time before even I was actually in the engineering college back in India. And it was funny, maybe not funny, but he did not have any pension or anything coming. So she was working after retiring from Reserve Bank of India.
Mm-hmm.
And so when we came here, we took a loan of about 4 lakh. And
Mm-hmm.
it was, I thought, okay, 4 lakhs, that's good. We converted that, it was about like eight, $9,000. We'll be able to survive. But when we went to pick up the check, they said, okay,
Mm-hmm.
we'll give you 2 lakhs now and 2 lakhs next year. I said,
Okay.
okay. So we had $5,000
Okay.
a draft, and we came to US and spent a couple of days with my brother-in-law and my wife's brother. He had been in US, and we spent a few days with him and came to Boston because that's the way college we I was accepted
Mm-hmm.
among the few others, but he suggested me to stay on the East Coast, and I went to Northeastern for my MBA. So I came here. I remember December, as you just mentioned, I had $25 in my bank account because the
Mm-hmm.
money just vanished because
Yeah.
at that time we were scared of people were working illegally in stores and stuff. We didn't want to take any chance, so we were not. Me and my wife, we were there, and so $25. That's I remember. I think I took $100 out of my ATM, and the balance showed 25. So
Okay.
once that happened, I had to actually borrow money from a very good friend of mine. We are still in touch, and then that was, I think, December of 96. And luckily, I was in school full time, and then I got an opportunity for an internship. I started working as an intern on the foreign exchange desk it used to be Bank Boston at
Okay.
that time. That was, yeah, 97. And
Okay.
that Bank Boston became Fleet Bank, and Fleet became Bank of America,
Okay.
and they are still there as Bank of America. So I was there for a good 7, 8 years
Okay.
before Bank of America had come in, and my turn came to get laid off.
Okay.
Yeah, that's actually normal. So when before I got laid off, there were like two or three mergers during that time frame, and
Okay.
I always used to see people getting laid off. It
Okay.
was, and so I always had in mind that we came from India. There was some sense of security. We had parents home, place to live, and there was some support.
Yeah.
Here we are just alone, no support.
Yeah.
So I always had in mind that I have to do something, not just job, because the more you make in a job, the more vulnerable you are to
Yes.
getting
Yeah.
laid off.
Yeah.
That's the reality, right?
I remember the same thing because when I came, I used to work as a consulting. I had an IT consulting firm. But yeah, and I was laid off during 2001 after 9/11. So yeah, that thing left a scar on me, and I said I don't want to be in that situation again. My mind also had that back of mind. I have to have multiple streams of income. I just
Right.
cannot be relying only on one stream of income. And for me, that was the reason why I got into real estate. Yeah, I can completely understand where you're coming from and what your thought process was. So you said you continued with Bank of America, and then I think after this, or when did you get into, when did you start your business and why? The why probably you just talked about, but tell us more
Right.
about that happened.
I think it's very common. Most of the people have this in
Hmm.
mind that we need to have multiple streams, but not too many people take action.
Yeah.
I think I'm sure you did, and
Hmm.
I did with my wife. It was around like we always wanted to do. We were figuring out one time we signed up for a tax service,
Okay.
like Liberty Tax Service there. So we opened up a store for the 3 4 months, and we used to
Okay.
go there. We wanted to have something going on. And then our kids were little at that time. So my wife could not. I had a decent job which was paying the bills, and
Yeah.
I did not want to take a risk of leaving my job and starting
Hmm.
a business because
Right.
we had two little boys and some sort of security need, like we wanted to have that. So I remember 2013, 2012, 2013, my younger one was about 7 years old. And my
Okay.
older one was 12, 13 years old, 5 year, they're 5 year apart, two boys. My wife said, now I think the kids are a little bit independent.
Yeah.
I want to be able to do something. So we said, okay, like she had a nutrition background.
Hmm.
She went to college, India May, I
Right.
think weight loss centers there.
Okay.
She worked for two, three
Mm.
months and then we got married and we came here. Okay, I can do nutrition. We came in 96 and it was 2012. It had been like 16 years. I think there is some time frame within which your degree from India has some value. After that, some it reduces. So
Okay.
she investigated, she would have had to study for at least 3 4 years to even get
Hmm.
to a bachelor equivalent because over there she had a master's.
Okay.
So, but 3 plus 1.5, 2 years, that was not accumulating to enough. So
Hmm.
we thought, okay, spend all that money, we'll probably make 65, $70,000, and then kids in daycare. So we said, let's look at other options.
Hmm.
We were looking online and we came across a franchise consultant.
Okay.
Actually, I ended up being a franchise consultant a couple of years ago.
Hmm.
So when we were talking to this franchise consultant, we were saying, okay, we want like few things in a business. One is obviously we don't have too much money to invest.
Okay.
Second was we want something which is long term.
Okay.
It's not like a small, it's something which is in now and out tomorrow.
Right.
So he showed us, I think, three options. One was a frozen smoothie place. It's a good option, a
Mm.
smaller option to start with. Secondly, we showed us a tutoring option.
Okay.
And the third one was home care.
Okay.
We had no idea what home care was before
Okay.
and so we found out, okay, it's taking care of elderly, like your
Mm.
parents. And my wife was always compassionate. She used to
Mm.
take care of my parents, and
Mm.
they were older. So they used to be with us in the US, and
Mm.
so she used to take care of them. So she had that inherent kind of compassion built
Right.
into her. And we said, okay, this is something we can like give back to the community. people need the service,
Mhm.
and at the same time, we can get a return on that.
Yes.
That was a, I think that was the point we said, okay, so I was working, paying the bills up front, helping her behind the scenes in managing the finances and all that stuff. And she went
Okay.
to the training. She started, I think, उनके training group में she had to go to Michigan to the
Okay.
corporate office. So Comfort Care is a franchise. So
Mhm.
currently we own 3 territories in
Okay.
Massachusetts around here. So there were like 12, 11 or 12 offices, businesses. Okay.
Okay.
And she had not worked in the corporate world in US before. So the trainer suggested her that she's not like she's probably unlikely to succeed, but
Mm.
to succeed, she should hire a marketing person.
Okay.
So she came back from training and says,
Mhm.
okay, let's look for a marketing person. We said, okay,
Mhm.
let's look for a marketing. So we
Mhm.
found somebody,
Mhm.
and she was an older person. She had a lot of experience, probably marketing in some medical field.
Okay.
And she would think like sitting at home, she would market. That's just back in the day,
Mhm.
2012, 13.
Okay.
May- उतना कहाँ I think digital marketing was not that big.
Mhm.
And
Yeah,
even
yeah.
now, हमारे business में digital marketing नहीं चलती है. You
Okay.
have to be out in the field to
Mhm.
get there.
Mhm.
So we tried that 6, 8 months, nothing was happening. First
Mhm.
6, 7 months, we had 1 or 2 clients here and there.
Oh, really? Okay.
So that
Mhm.
was tough time. And
Mhm.
Sue, my wife, said, I'm doing whatever they are telling me to, and I'm not getting anywhere.
Okay.
मैंने कहा यार नहीं हो रहा है तो कोई बात नहीं छोड़ दो.
Mhm.
Whatever we invested, 70, eighty
Mhm.
thousand dollars,
Mhm.
it's no big deal. So we'll look for something else because we
Mhm.
had tried a couple of things before.
Mhm.
So she said, no, I want to make it happen. And she had it in
Mhm.
mind that someone had told her she's most likely or most unlikely to succeed. Within the next 2, 3 months, we were breaking even.
Wow.
And that was 2014. We signed
Okay.
the document 2013, 2014. We started after the license and all that stuff. And then 2015, we were up 20, 30%. And we constantly grew.
Mhm.
Even last year from the year before, we are up 20%.
Okay.
A couple of years, we were a little slow, stagnant,
Mhm.
but we had a good run.
Okay.
So yeah, we still have 100 odd, 250 odd employees in that,
Mhm.
and I manage the behind the scenes, and she managed the front end of the business in terms of client
Wow.
relationships, and she has built tremendous relationships, and that's what's the benefit we have received in terms of growing the business
Okay.
there.
Okay. So that's really wonderful story. And you mentioned that there was a time when you were not making any money initially. So
Right.
what I'm interested in knowing is what did you guys change there for it to transform into become getting breaking even? So was there anything specifically that you did which helped you, or it was just a matter of time that things picked up? Just a little it took a little more time for you to get acquire the customers.
Sure, very good question. So what
Mm.
happened was we analyzed after the fact, like why we were not getting and
Yeah.
why we are suddenly succeeding.
Mm.
So what happens is Massachusetts is an easy state. It's not a licensed state. So for
Okay.
home care, people can just apply for a license at that time. Right
Okay.
now, there's no license required in Massachusetts.
Mm-hmm.
So anyone can go out and say, hey, I want to start a home care, and you can start
Okay.
like this. But that back then, you could easily get a license, and there were so many people
Okay.
getting into the business. So what was happening was people would see these people come in and come, like they will be there for a couple of months, and then if it doesn't work, they drop out.
Okay.
When they saw Sue and me not dropping off, we were building the trust.
Okay.
We were doing exactly the same thing
Mm.
the franchisor was teaching us.
Mm-hmm.
It took time because they did not trust us, because
Mm-hmm.
they had seen other people come and go and
Right.
leave, and they didn't want. So when you are providing care for somebody, you are the person. If someone is offering you a
Mm-hmm.
client, it's their trust factor is there, because if you're not doing well, then it's up to them that they got us to a bad company. So we had to gain the trust, and that's how we
Yeah. So
kind of
basically, what you're saying is the consistency, being in the game and
right,
being there when things were tough, that kind of helped you establish yourself and help you
correct,
build the credibility and trust with the customer base. So they saw
correct.
you that you have been there and you are continuing to work and operate in this business. Yeah. So basically, what you're saying, yeah, consistency is what. And I think that's a
Yeah.
good takeaway from this. You have to be patient, you have to give enough time, and you
Hmm.
have to keep doing what you're doing. You have to believe in it and then just continue doing it.
Absolutely.
Yeah, and these kind of things doesn't happen overnight. I think these things do take time. Building a business is not something which will happen overnight.
Absolutely.
It's a long haul. It's a long haul. It takes a lot of time. Yeah. So good, good.
Correct.
So talk to
Yeah.
me about this partnership model that you mentioned, right? That your wife was up managing the front and you were behind the scenes. So right. So and I'm just talk to me in terms of what worked for you in this model and why I'm assuming you why you did not transition into the business right away. What was stopping you? What was the thought process there?
Yeah. So initially, I was paying the bills, right? For at least about a year or so, you can say a year and a half or so.
Okay.
Then we were able to replace my income. When our income is coming, it doesn't hurt. And
Yeah.
I was able to do manage with my job as well. But so the thought process was okay, once we are able to secure our income, then I can jump in. And
Okay.
then an opportunity came in 2018 when I was with a bank in the field, which I wasn't like, I was not in foreign exchange at that time. I was in the
Mm-hmm.
product management.
Mm-hmm.
And I felt like I was out of place. I was there for about a year and I had never done product
Mm-hmm.
management before that. And maybe it was my thought or whatever, I was asked to leave. So the layoff.
Okay.
But funny thing was, I had reserved a car, nice car, and I
Mm-hmm.
think the same week or the next week, I ended up buying a brand new X5 because we had generated enough
Mm-hmm.
income, was able to replace it. So, yeah, the thought process behind that was to secure some. And
Yeah.
then once you have secure. I guess the mentality came from
Yeah,
back
it's
home.
Indian.
That
It's Indian culture, right? You think you don't rush into things. You take your time and you slowly transition into it. So you're
right,
basically treading your very carefully. Yeah,
right,
yeah. No, I completely understand. But I think that's a strategy which has worked for me
right,
also. It's the same strategy that has worked. We transitioned. My wife Preeti, she started her own business, and then she was continuing while I was earning, like the same thing, and the idea was at some point I can transition into it if I want to, or we can just continue depending on whatever.
right.
Yeah.
Exactly.
So
No, that's a
during,
good way
yeah,
to go
yeah,
approach.
yeah,
Yeah,
I completely agree. So you're not taking a risk. You're basically trying to mitigate the risk. You're trying to, yeah, this is to me, it's more of a calculative risk that you're taking. Right? So
right,
you're
right,
ensuring that you have enough and you're not putting everything at risk. Yeah,
right.
that makes sense. So during this phase when you had seen the upside, was there any resistance? Did you ever felt internally anything stopping you that, or especially when things were not going as per the expectation? And so if there was, what it was, talk about any internal resistance that you felt or you dealt with, and how did you overcome that? If you can talk about something on those lines.
Yeah, so in my case, the resistance was just internal, just my belief, okay, I need to be able to secure my kids were younger, we didn't want
Mm-hmm.
to jeopardize. And I had seen in the past some families which they didn't plan well and it didn't go the way they were looking for, and health issue happened and all that stuff. So my it was just internally me thinking, okay, let's do it step by step. When we started earning a little bit more money in 2013, 2014 timeframe, one of my friends was after me. He said, "You have to invest in real estate. You have to invest in real estate." And
Okay.
this was a friend of mine from my high school days back in India. He had come down And he came and followed us, did his MBA at
Mhm.
Northeastern, couple of years behind us,
Mhm.
and then he went to Colorado. His actually he lost his job within 6 months, but he moved
Mhm.
to Colorado and then he started investing, and then he moved to Dallas.
Okay.
And I think 2013, 2014, he said, "Hey, you need to come to Dallas. It's an awesome place for it."
Mm.
So I made like a 2, 3 day trip there
Okay.
just to see what's going on. I and real estate was always intriguing. I heard stories that you can do really well.
Mhm.
I didn't know. And in Mass,
Mm.
Northeast, rental properties and stuff we were looking into were not cash flow positive at that time. And people used to say, oh, yeah, you'll make money when you sell it. So I was not that comfortable.
Mhm.
And I ended up, when I went to Dallas and he showed me the numbers, and I was like,
Okay.
okay, why not? So we bought a condo, two unit,
Okay.
for I think $160,000 in 2014. I think that's when we
Okay.
bought.
Okay.
And in that same at the same time, our business was growing, and I was thinking, okay, this money is good. Stock market is good. You can
Mhm.
invest. We our 401ks and
Mhm.
the investments were there, but I always was intrigued
Mm.
about the real estate, what
Okay.
real estate can do.
Mm.
So I started more and more into real estate as well at that time.
Okay. Okay. So you mentioned you bought the townhome, right? You bought some
Yeah.
townhomes. So while you were investing in real estate and your business was running and you were doing well in the business as well, was there some kind of a shift in your mindset? You mentioned something to me while we were talking, that something about owner mindset, right? And so talk to me about what do you mean by the owner mindset and how that changed you in terms of how it helped you.
Sure. So owner minds, that's a very good point, Himanshu, you mentioned.
Mm.
See, when we are working in a job, everything is owned by the owner of the company. Like your mindset is, okay, a stapler is just for work, and
Mm-hmm.
you don't even own that when
Right.
you work in a job. Now, when I started investing in real estate, and it's my friend, the realtor friend back from Dallas, he was key in for me to understand the owner mentality. He said, okay, as long as your goal is reached, there's no harm in investing.
Okay.
For the example, say like when you're having, so when we had a condo back in New Jersey, right, sorry, in Dallas area. Now, we ran the numbers. We
Mm-hmm.
had included servicing, like breakage and all those things. And in, after calculating the whole thing, you're making, say, 10% profit. But if you have to pay 7% or 10% for property management, it should not be a big deal because you are meeting your numbers.
You're right. Yeah.
So that's the change between like owner mentality versus W2 mentality, you can say.
Yeah. So you're not nickeling and diming things. You're looking at, okay, is if this makes me enough money, what I want it to make me, I don't mind giving a small percentage to the person who helps you manage it, right? Because that's part of the
Exactly.
cost of doing business. So I think
Exactly.
that's a change. Whereas an income oriented person, you're looking at it as a cost, and you're thinking of it as if somebody's taking it away from you, what you should
Right.
be earning.
Right.
Whereas in case of an owner, you're thinking it the other way, that this guy is
Right.
helping me make the 10% that I want to make. And
Right.
yeah, so you're working with the team mentality, you're working with a different mindset. Yeah, you're working in terms of how this person can help me make money.
Right.
And yeah, yeah. Okay.
Yeah. So yeah, you put it
Hmm.
very nicely, and yeah,
Yeah.
that's exactly what I meant.
Yeah, yeah. So talk. Okay, so that was your first deal that you did in real estate, and then
Yeah.
you had mentioned you have done a lot of other deals. So talk to us about different deals that you have done after that. So yeah, just walk us through what kind of other things you have done in real estate since then.
Sure. So that was our first condo.
Mm-hmm.
Then my friend was, as I said, he's in Dallas. He says like there was a massive inflow of people and companies in Dallas area. So they are
Hmm.
growing. And if you have visited Dallas, it's like ever expanded.
Oh
Every
yeah.
time I go, I have been there like a few times, like every year or two.
Yeah, yeah.
And every time you go, the highways
It's
are just going,
yeah.
expanding like anything. So he
Hmm.
said, hey, I think let's invest in some land.
Okay.
And so actually my neighbor and this my realtor friend, we
Hmm.
invested it. First experience was, I think it was 2017, 2018. We
Okay.
bought 100 acres of land.
Wow, 100 acres to start with.
Yeah,
That's amazing. Yeah.
it was all
Yeah.
farmland. There was
Okay.
nothing.
Okay.
So good benefit, a good thing is when you're buying a farmland, you don't
Hmm.
have to pay that heavy taxes.
Yeah. Okay.
So farmland is very lowly taxed. That was and then we sold a part of it in later on, couple of years down the road, and another part and another part. We
Hmm.
still have 30 acres left of it. We did use that money. We had taken some loan for,
Okay.
and then when we sold a part of it, we were able to pay off the loan.
Okay.
And the second part, when we sold, we did a 1031 exchange.
Okay. Okay. So
I'm not
1031
sure.
exchange for my viewer, just to, so this is if you have an investment and if when you sell that investment, government allows you to do a 1031 exchange. What that means is you can invest in properties. So anything commercial can be invested into a commercial property. And what you do is you take all the proceeds, everything that you have made in that transaction, you put that money into the next transaction. So it allows you to go and buy something much bigger if you want to. And in that process, what you're doing is you're saving on the capital gains tax. You're not paying the capital gains tax. You're just transferring it, you're deferring it. And yeah, so talk a little bit more about 1031 exchange. How was your experience with that transaction? Anything that you would like to share with the audience, or not, anything which was a good learning experience, something that people need to be careful about in the transaction?
Sure. So 1031 is a great
Hmm.
opportunity which we have in the United States. It's not even there in, I think, Canada, I believe. So it's a great opportunity. So what it does is the condo I bought in 2013, 14, I had bought for 160,000, I think. And 2020, we sold it for almost $300,000.
Okay.
I had not put in a whole lot of money. I had borrowed money against private home equity line and it was cash flow positive. So, so when we got the $300,000, I ended up buying two other properties instead.
Okay.
One again, 2 unit in Dallas area, and one a vacation home in here in Cape Cod. So that all I think you have to be worried about that you have to close the transaction, the new transaction within 180 days. And I think you have to identify within 90 days or something like that,
Right.
that you are going to buy this and you're going to close in. So if you do that, you don't have to pay the capital gains tax
Hmm.
and you defer that. So then for, I think it's a great option. One good thing I learned during that process is if you need it for yourself, fine, you have to pay capital gains tax at some point when you liquidate, that's okay. But if this is part of your inheritance to your
Hmm.
kids or something, say for example, you bought a property for $500,000 and 30 years later, you this value is say $2 million and the kids inherit that property. Think this way, if you had to sell it before inheritance, you have to pay capital gains on that $1.5 million. But when the kids inherit it, they sell it the day they inherit it. There is no capital gains tax for them
Okay.
because it's a step up of the asset value they get at. It's
Okay.
the day they inherit the property, that's the date of the cost basis.
So it's evaluated based on the cost at that point of time when they inherited it, not what
Exactly.
at the time when it was bought. Okay.
Exactly.
So
And
basically that, yeah.
all those 1031 exchanges can be clubbed into this and you can keep on buying bigger and bigger properties. And I think that's an enormous way to create generational wealth.
No, I mean that I completely agree with you. I think that's the beauty of investing in real estate, and that's how it's very different from stocks, right? In stocks, you're just focused on tick the ups, and it's more volatile. Whereas real estate, it's a
Right.
slow process. But to me, I like real estate because of it that it's tangible, and then
Right.
the leverage that you get. To me, that's a big part of it, right? You put a
Absolutely.
20% only, and then 80% you get loan, and
Yeah.
then when you sell something, you get 100% of the profits.
Yeah.
So that's
Appreciation happens on
the
the
appreciation.
100%.
Yeah, yeah. So there's a lot to it that helps you build wealth over a period of time when you're
Exactly.
working with real estate. No, very well said. Yeah, I like the part that you talked about, that you mentioned how inheritance changes everything, right? When it's inherited by the kids, step up process, they're not paying for them. The inheritance, the value of the property is at the point when they inherited it.
Correct.
Yeah, yeah.
Correct.
So
And
this is good.
also, if you're talking about the stock market is good. People have made ton of money on that. But I say to myself that I am like pretty aggressive investor. But when the market drops 10, 20%, I
Yeah,
feel like, okay, I'm going to change the portfolio. I
yeah,
don't do that, which is, I think that's what been told to me that, hey,
yeah.
just
Don't react, don't panic. Yeah,
don't
yeah,
panic. And I actually don't look at my portfolio
yeah,
when,
yeah.
on down days because it doesn't feel good. Now, if you compare at this real estate, in some cities, the real estate value has gone down. But you know what? It's not on a daily basis, it's going down.
Hmm.
So if you're not looking at it out of sight, out of mind, so you're not, and as we were talking, real estate is a marathon. It's not like you invest today and you get the benefit tomorrow. This is not, that's not the right means to do that.
Right.
Real estate is a long-term investment and grows consistently over a period of time, and we all should take advantage of that.
No, this is good. This is good. So you have done different transactions at this point. You invested in land, you invested in condos, you have a vacation rental that you run, right? Uh,
Yeah.
in terms of going through the business and all that you're doing, you also mentioned something to me that you are getting into construction now, right? So you're
Yes.
looking into getting into construction. So talk about what you're doing there. What are you looking to do in the future?
Okay, sure. Actually, I besides only land and condo, I had invested with a group of friends in a commercial plaza as well.
Okay. Okay.
So at different learning points and different things. Obviously, when you're buying a condo, there are, if you're buying a new one, then you don't have to appliances breaking down and stuff like
Yeah.
that. When you're buying an older one, but should work. And even
Mm-hmm.
if you have to replace air conditioner, which we had to do in a couple of few times, as long as whole thing works out for you, whole numbers
Mm.
work for you, you don't have to worry about it.
Yeah.
Things will happen.
And I think that's one thing people need to keep in mind, especially when you're investing in real estate. It's like any other business. Some years are
Yeah,
better, some years you don't make enough, and that can happen, right? The equipments, the systems that you have in any of the real estate, any building, those usually last for 18 to 20 years. So you got to
right.
keep that cycle in mind, and you would have to replace them at some point of time. So the
Right.
years when you do that, you're probably not going to make money. But that's fine because, again, the intention is to keep the asset, to hold it for long, and to help it build equity over a period of time. Yeah.
Yeah, absolutely. Commercial plaza for I was talking about commercial plaza. This was some learning experience
Mm-hmm.
to do our due diligence properly. So
Mm-hmm.
things happened, and I'm a little bit worried about the commercial plazas because everything is going online. So I'm more open to residential. Actually, I don't know whether I mentioned I had my son buy his first rental property as well. He's
Oh, wow.
25 years old
That's good.
and he bought it just about a year ago, first condo. And I said, I can help you with down payment. He says, no, I can
Mm-hmm.
manage that. And
Okay.
he's managing that. And again, it's through my friend in Dallas area.
No, that's
Yeah,
good. We did the same for our daughter. So so when she started working, I said, why pay in rent? Why don't you build your own asset? Start
right,
building it. And then at some
right,
point when you move out, You can rent it out and you have something. So I think it's a very good mindset, and I think it's good to expose our kids to that. So talk more about in terms of why you did that, why did you made him invest? That's one. And is there what else can you share in terms of what you're doing to help him understand more about financial management and in terms of how to build wealth over a period of time? Is there anything else that you would like to share in terms of how you are doing it with your kids?
Sure. So kids, I encourage him. So this is our
Mm-hmm.
older one who's working. He has his income coming in. Our younger one, he's in college. He's a junior in college, another year before he graduates. And he has also saved some money. And whenever he's ready with his first job, full-time job, he's working right now as well on campus and all that
Mm-hmm.
stuff. And again, I've seen both the kids do not want to spend where they
Mm-hmm.
don't want to spend. I don't know, we told them the benefits of savings and all that
Mm-hmm.
stuff, but I'm happy that they're learning from us. Our parents never had that opportunity. They never, they
Yeah.
were simple people working government jobs and
Yeah.
providing for the family, and thankfully they provided the education and I was able to come to US. That's always thankful for the parents. For the kids, yeah, I'm just teaching them on a regular basis. When we meet, we talk about it. And when I've told my younger one, when he's ready,
Mm-hmm.
his first investment will be in real estate as well.
Oh, that's
Yeah,
good. That's good. I love that. I love the fact that you're passing it on to the kids and you're helping them learn the ropes in terms of how to do this, how to build this wealth. For us, it was all new learning. For us, we had to
right.
do it on our own.
Yeah,
And I think that's where you can help kids and you can escalate or you can exponentially help them grow in the
right.
coming years because they would have a very good head start with the
Absolutely.
support. Yeah. Yeah.
They're doing stuff at 25 when we probably did somewhere at 45. So they're 20
Exactly.
years ahead of
20
us.
years ahead of us. I agree. And I
And
think this is a beautiful thing. Yeah.
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 So your question about getting into construction. So yes, so we had to rebuild our own residence. We had an issue last year, and so we are going through the construction. And during
Mm-hmm.
this time, I met through this contractor and another person who referred me this contractor and liked
Mm-hmm.
him. And so we said, you know what? I have some time free. So why don't I get into construction? It always was my second passion, once in real estate. Second, so we have a ton of land back in
Mm-hmm.
Dallas, but those we normally have a bigger lots. You can sell in smaller lots and make
Mm-hmm.
profit. But I always wanted to get into construction. So this is
Okay.
my new for. We recently closed in December on a piece of property in close to Boston.
Okay.
And the goal is we bought this place for a little over $1 million, about $1 million or so, and that, and let's see how it gives us a return. But with changing, like with bill, I could never have thought of while in a job buying $1 million. Obviously, it's not cash, but
Yes.
even without cash, that is too big of a risk.
Yeah. Yeah.
When we were, and I remember back in the days when we were here, we used to survive in $700-800 a month a student. But now, okay, $1 million. I didn't have to think a whole lot
Yeah.
before making that decision. I said, okay, let's go for it. We'll give it a
Mm-hmm.
shot.
Yeah. Yeah. I think that's what real estate does. That's what business does to you is it once you have done enough, and I think it helps you, your risk taking appetite changes, right?
Yeah,
You realize what it can do for you. Basically, it allows you to think in terms of what money can do for you rather than so you're getting away from the again the W mindset and getting
right.
more into the business mindset where you are looking at money to work for you rather than you trading time for money. Yeah. Yeah.
Absolutely.
Yeah.
Yeah.
This is good conversation. So w- tell us about in terms of when did you realize that I have made it, right? I've done well. So is there a moment when you or you're still waiting on something to get to the point you still don't think that you have made it? So talk to us in terms of where what do you feel about that? Is
So
there a made it
may
moment for you?
so made it moment, I think one can always do better, right? So made it in the sense like, okay, right now, if something happens to me or my wife, we don't have to, or the family doesn't have to worry, the kids don't have to worry about it. We have provided education, we have enough assets and all that
Hmm.
stuff. And if we don't want to, say, if you want to take a 6 month break, go to India
Yeah.
and travel, that's we can do that at this point.
Mm.
So I think that might be something which we can say we have made it. For the last 2, 3, 4 years, we have been thinking about, okay, how do we want to handle our next phase of life? So we started a couple of years ago, we started franchise consulting. I remember when I mentioned to you that I went through a franchise consultant, that was like, okay, now we have secured ourselves, secured
Hmm.
life for our family, for the kids. How did we do that? Came out of the corporate world and started a business, and business helped us create wealth.
Hmm.
And at the same time, the money we were making, we were investing in stocks,
Hmm.
maybe, or real estate. But how do we provide that opportunity to others who are thinking of, okay, I want to start a business?
Right.
So, as a franchise consultant, I do not get paid from my clients. I get paid from the companies I work.
Right.
So the company we have, Comfort Care, it's a franchise. So I've helped others as well in this field. So I feel that if I can help a few people come out of the corporate rut, that would be a good thing.
No.
So they can be on the same path of
Yeah.
success.
Yeah. Exactly. And that's, I think that's the whole point of this podcast too. For me, it is more of sharing, bringing these kind of journeys in front of people, and especially people who are sitting on the fence. And they have been, because I talk to a lot of my friends, and they say, I want to do this, I want to do that, but they never take the plunge. They never take that first step. And I'm hoping, and I think that's my intention here with this podcast, is that I can bring more and more of these kind of stories where people can see what happens when you take the first step. I'm not
Right.
saying that it's going to be easy. I'm not saying that everything is going to work out for you,
Yeah.
but definitely if you consistently keep working and with your intentions, it will work out eventually. It's just a matter of time. Yeah.
I
Yeah.
absolutely agree with you. And I have had, as a franchise consultant, few clients. People, as a couple, a lot of Indian couples, they say, okay, we want to do that. We want to be able to provide better lifestyle for our kids, pay off their college tuition, things like that. I've had a couple of people, they said they will leave. One person will do the business and the other person will take a job.
Hmm.
They were on the fence and they still are sitting on the fence. They haven't
Yeah.
made the decision. But I have some people who have
Mhm.
made the decision and they left a job.
Right.
One of them left a job and started the business, and then they are on the right path. And with the franchise option, that is helpful because there's a backing behind you. You
Yeah.
can be taught from the franchisor has an plan. They have done it successfully with you and
Right.
few others, so they
Yeah.
can teach you. And that's what we have done. So,
Yeah. Yeah. And to me, I think that makes sense, right? Especially when you are new to the business, when you do not have the understanding of the business. I think going the franchise route is better. Yeah, you pay them some for certain fee, but in
yeah,
return, you are getting a time tested model. You are
right,
getting all your SOPs, you're getting all the business processes, you're getting a lot of things which you are lacking. And working with the franchise, you have another partner who wants you to succeed. So it's an important aspect. People think, why would I get into franchise and why would I pay them of what I'm earning? Again, that's coming from your income mindset, right?
right,
That's where you need to change it into a business owner mindset and say, okay, I need to make this kind of money and this franchise can help me do that. So if you have to share a portion of what you're making, then be it. But at least it
right.
gets you on the path.
Exactly. And
Yeah.
If you're making money, paying a portion, say
Yeah.
5 to 7% royalty, is
Yeah.
not that big of a deal. And as a franchise, the initial fee goes towards your training and all that stuff.
Yes.
Company doesn't make money unless you make money.
Right.
So it's a very good model. Not everyone has a brilliant idea which can make a $1 billion
Yeah.
company,
That's
but
true. Yeah.
yeah, but you can be successful using a franchise model. So I feel
Okay.
that way.
Yeah.
I think that's a very safe investment, but again, nothing is guaranteed. You have to work, make it.
Right. No. So I think we're getting towards the end of our podcast. So the two things that I usually ask all my guests. One is I ask them, what's your core principle or belief or a cultural thing that
Mhm.
has helped you in your journey? So do you have a core belief or something which has helped you all throughout? Can you share something on that and then just talk a little bit on those?
There are a couple of quick things. So the core philosophy when we were building the business was treating both. So we have a whole lot of employees and a whole lot of clients. Treating both as a family because the caregivers in our industry, they don't get paid a whole lot,
Yeah.
but
Yeah.
they will work for you. They have to have a heart to be in this
Mm-hmm.
business. So if you treat them well, they'll do things for you. And you will be able to succeed.
Mm.
So treating both employees as well as clients as a family, that definitely helps. And secondly, I have seen over like investing in real estate. I feel that is a good way to generate wealth. Again, it's not a quick fix, a quick thing. Maybe you can win a lottery, but
Mm-hmm.
real estate is a long investment platform. It's a
Mm-hmm.
marathon. So I
Mm-hmm.
think these two focus has helped us generate wealth and help us be where we are.
Okay, good. I completely agree with you. Treating your employees, treating your customers the way you would like to be treated. And I think that makes it a lot of difference, especially in the senior care business that you handle. I think
Right,
compassion and empathy, those kind of things are very important, kindness.
right,
And if you are being nice to the caregivers, the chances are they're going to pass it on to your customers. And
right,
it's a good, yeah, it works well for everybody in the business
right.
in a way. Yeah. So the second question that I generally ask my guest is your what wealth building and financial freedom means to you and your family. So if you can give what's your definition of wealth building and financial freedom, what works for you?
So wealth building and financial freedom means, okay, I know financial freedom, everyone talks about that money is not controlling you, which is definitely there. You can make decisions based on what you like, what you don't like, what you want to do. That's one thing. And also, like how we have accomplished is we have invested our income into
Hmm.
assets.
Yeah.
So that kind of creates us like a little safety net, you can say.
Mm.
We know. So I think the financial freedom is again to be able to focus on the family, focus on
Mm-hmm.
health, for taking care of the community.
Mm-hmm.
That's what is, I feel, the financial.
To do what you want to do in a way,
Exactly,
and focus
exactly.
on things that matter to you
Right.
rather than you are trading your time or doing things just for meeting your both ends meet. Yeah.
Yeah, so I'll give you an example. For example, last year my mother was not well,
Mm-hmm.
and my sister called me from India that she is not well. And I had come back from India like just like maybe about a month ago. At that point, my wife said, "You know what?" So in
Mm-hmm.
the morning, she got a call. She called me that mom is not well. She was on the flight in the evening. So
Yeah. Yeah.
that kind of things, if you
Yeah.
are in a job,
You cannot. You got to get an approval, and then you can
yeah,
only be out for so many days. You don't
yeah.
even have the leaves. You've already used those. I
Yeah,
mean,
I was away for about a month, and that
yeah.
was on a Sunday morning. I got a call, and Sunday evening I was on the flight.
Thanks for sharing this, sharing part of your journey, and in fact, just sharing these good nuggets in terms of what you have learned in the process. So, as we are wrapping up the podcast here, just to quick, What would you suggest to people who are sitting on the fence and not taking? What's one thing that you would suggest them to do so that they can get there where they want to be in their life?
A couple of options, I would say, if you have the capacity, invest in real estate. That's one thing which will help you. I'm sure it took me few years to make the first purchase. And secondly, the thing is, if you can start something on your own, which
Right.
includes obviously real estate or start a business or something, I think that would be that's definitely my motto. That whoever I can tell,
Hmm.
those are the things. If you can do it, that will help you in the future.
Okay. So thank you, Sumit. Thank you being on the podcast. It was really nice chatting with you. And I'm sure a lot of listeners would appreciate the story, your journey, how you have turned a $25 bank balance into a legacy of generational wealth. I think your journey is a masterclass in showing the shift from income focused mentality or a mindset to an equity focused mindset. So thanks for joining us, and I look
Thank you so
forward
much
to
for inviting.
yeah, and I look forward to chatting with you some other time. Yeah, maybe in
Absolutely.
the future. So thank you. Thanks again. Thanks for listening to Recalibrate. If you found value today, please subscribe and share this with someone who's tired of just doing fine. Check the show notes for guest details, and until next time, keep building, keep growing, and keep inspiring. I'm Himanshu Jain signing off. Let's recalibrate.